Hey everybody, Day Trader Rockstar here, and we're going to be talking about an upcoming event and a trading strategy going into the event. This next week, on Wednesday, we have the FOMC rate decision, and this is usually a big market moving event. And I want to set up and take a trade into this, and I want to just kind of put it out there. I think it's probably worth everyone to trade it and maybe take a shot on it because it is a market moving event, and we're always looking for market moving events. Now, I broadcast live every day since 2007, live on daytradingradio.com. We get in the markets every morning at 8 o'clock. I broadcast my screen, and we trade from 8 o'clock to 4 o'clock every day. I've been trading since 1996 full time, and I've been broadcasting my trading on the on live on the internet since 2007. The FOMC rate decision, which we're going to be focused on next week, is an event that comes out once a month, and it's when the Federal Reserve comes out with their decision on how they're going to, what if there's any rate change in the interest rates. It could be either a rate hike or a rate cut, or they're going to continue to keep it as it is. And in this case, we will expect it to stay the same. And the rate decision, as you can see here, rate decisions usually are priced into the market because the market is always looking at this. It's very important that the Fed control inflation, and they try to do that with a dual mandate. Excuse me. The big thing is, trying to cool off the economy by raising interest rates. And it gets to a point where they have to not overshoot, but then start to pull back. And the market really wants the Fed to kind of pull back on interest rates and start cutting. That's usually good for the market. But we still have economic indicators that come out every month and every week that kind of measure the economy, and if the economy is hot, or if interest rates or inflation is coming down, and it's just not coming down. So they kind of measure it out and say, well, the Fed's probably not going to do anything drastic, and it's kind of, they'll talk about it, and it'll pretty much get priced in. So this week coming up, they're not expecting to raise or cut interest rates, all right? But the real, movement comes on the statement, and the statement is kind of their projection of what they're looking at, what the members are looking at, how many, current conditions, and it's a lot to do with the wording. And not to go into the whole history of this, but right after that, after the that announcement, we tend to see a move in the markets, a big move in the markets, and then half an hour after that announcement, Jerome Powell, Fed Chair Jerome Powell, Fed President, will make a speech live and take questions, and do some question and answering segment for about 30 minutes. And this typically also moves the market a lot. So this is what we're going to get prepared for. All right. Now, I've been in the markets, like I said, from 2007. They schedule these things about 8 times a year. I did the calculations. I probably broadcasted about 136 Fed FOMC meetings, 136, which is pretty good. I think I might hold the record here. After the initial announcements, if there's any change in the rate, then we have the statement, and then we have what we call the press conference. And the press conference, as you can see here, is about an hour long and has 2 parts. First, it's the prepared statement is read, and then the conference opens to press questions. Questions often lead to unscripted answers, which create heavy market volatility, and that's what we like. All right. For volatility, is basically the market making big moves. So we're going to, here at Day Trading Radio, we trade futures, stocks, and stuff, and everything will move. But this is a great event, a great opportunity if you trade futures to get a big move. And now with a lot of our traders trading prop accounts, and prop accounts are usually evaluation accounts where you'll have a basic, I'll kind of break that down for you fast without going into too much detail. I have a lot of information on my site if you want to catch up on that. And this is, again, going out to a lot of people who are already doing the prop accounts. I'm just telling you, get ready, because this Wednesday we're going to take a couple big trades into that meeting, and we're going to try to qualify a few accounts just on the meeting. So this is for for futures traders mostly, but a lot of people will see the action in the market. It's pretty good. So you have your account, whatever it is, and we're going to talk about prop accounts right here because I think it's worth it. Typically, I do not condone gambling in the market. I have an exact method in the market that we trade every day here at Day Trading Radio. We use this stochastic divergence methodology. Included in that is pattern recognition, a lot of technical analysis, and years of experience. And we tear the market apart every day. So I rarely recommend gambling. But in a situation where you have a very cheap or a low-cost prop account, and that's what we're going to talk about today, is the current coupon out for the prop account. You see it on my board here. There's I'll kind of focus on the Bolonox one right here because it's a 90% off coupon, 90% off the current price of the coupon. Now that brings the account. Normally, let me show you this. Bring this up. If we go to the Bolonox and we say join now, a lot of you might already be familiar with this. We use two prop firms. We use the Bolonox and the Apex. Both of those we've been using for over a year now because we know them well. They're a good firm. They do good payouts. Everything is legit and everything is really good, and they give us great coupons here at Day Trading Radio, which brings the price down drastically. So if you were to open up say a 25K account, typically, and again, this is just an industry thing, they always give out coupons. So you're never going to pay the full amount, and this is the monthly full amount, $115. So people, they don't do that. They give out the coupons, and I have a coupon, DTR 90 is the coupon here. You just put in DTR 90, and then you make sure it's on 25. Does not work on the 10,000, and do the 25K or the 50K, and you'll see it brings it down to $14.50. $14.50 to open up a valuation account. So that's an incredible thing. 50K account is only $17.50. I mean, you might as well do that. Or a 100K account is only $21.50. All right, it's very cheap with the 90%. Now the thing with the 90% coupon, it's only good for 1 month, the first month. Prop accounts, you get the account, and what you have to do is you have to qualify by either achieving the goal of profit target of $1,500. You're only allowed to use up to maximum 3 contracts, and your maximum trailing drawdown is $1,500. So it's kind of a 1-to-1 trade-off between profits and the stop loss, and you're able to use 3 ES contracts or 30 MES micro contracts. Each one is a little different. The higher you go, the higher the price of the thing is, and the bigger the profit you go, but you get more contracts you're able to use. And again, the profit for 50K would be $3,000 and stuff. I always recommend people starting off, use the 25, 50, or 100K account. Get used to it. Understand how it works. It's not that hard. You sign up. You're able to get the, what they'll do is you sign up. Very easy. You put your credit, PayPal, whatever, fill in your stuff, and they'll send you a link with everything, with your NinjaTrader account, your license for a NinjaTrader, your rhythmic data feed. So you're getting everything to trade with. But it's a prop account, which it means it's an evaluation account. And the object is to make the profit before getting stopped out. And if you do that, you're able to hand that account in, submit it to the firm. It's basically, you don't have to deal with anybody. It's nothing. There's no risk for you at all, other than the money you originally put into $14.50. But say you get your profit target hit, then you submit it, and they'll give you a live account with a 25K in it. And then you continue to use the same rules. And there's other rules out there. There's some other things that you need to know. There's a couple fees. If you get a main account, they charge a one-time fee about $100. So $100 and something dollars. It's about, I don't know what the exact amount is, but it's a one-time fee to trade the live account. But with the live account, you get to keep the profits. And there's some guidelines on that also. But basically, if you're making money, you're eventually taking profits out and wiring them to yourself just like that. Now, it sounds easy, but it's very hard. The markets are very difficult, and if everyone could do this, everyone would be doing it. But it's, markets are very volatile, and the trailing stops, trailing drawdowns are there for a reason and stuff. But this is an opportunity to trade an account like this into an FOMC rate decision. Now, a lot of these firms don't allow trading into news, but these firms that we work with allow trading into news. So this is all good. So say you open up your Ninja account, you got everything set up. The coupon code, let me just show you right now, in case I forget after. The current codes right now, the 90% off for the Bullinox, any of the option 1 accounts, 91 is DTR 90, and the Apex is 80% off. And the coupon code for the Apex is DTR Apex, all right? And that means it's 80% off. So 80% off. The difference between this and this, the Apex, I believe you're allowed to trade 4 contracts, and it's recurring. So after the first month, you continue to be, you continue to get the discount. Where this one, the 90%, is only the first month, and then it reverts back to the higher price. So the object on something like this is to qualify fast. That's why I said only use the 90% one month for a hit and miss type of gamble. Just remember this: when the 1 month is up and you still have your account open, this will not charge you $14.50, but it'll go back and charge you $145. So I always say if you're going to use the 90% coupon, make sure you're trying to qualify within the month, so you can hand that in and go to a live account before you have to, pay the bigger price. Anything with a lifetime code, in this case, the Apex, you don't have to worry about it reverting to a higher price. You'll keep that same price. So whenever you're looking at prop accounts and looking at coupon codes, make sure they're lifetime. All right. This one, Apex, also has what we call a 1-day qualification. Lots of times you have to have about 7 days of trading in under your belt before you're able to submit your qualification or your valuation account in. In this case, Apex does put out a lot of coupons that include what's called a 1-day qualification clause. That means if you qualify in 1 day, you could just hand the account in and get qualified and get your other new account, a funded account, and start trading that. So there's some benefits between both of them. I think most people like the Apex because you can trade more contracts. It has a 1-day qualification. But like I said, the 90% might be fun for a FOMC rate decision because you're only charging $14.50 for a 25K account, and you can make that $1,500 just on the right, if you're on the right side of the market. So that's how that works. If you need more help on that, head over to daytradingradio.com. I have a button. I'll put it in the description of the video here. The prop page that we have that kind of talks about how to open it up. I have a video to help you guide you through how to set up the prop account and stuff. That's on the on that page. So just look in the description of this video, and you'll see that that page there. So what happens is, this is actually, I scrolled back until last month, because every month we have the rate decision once a month. It comes out at 2 o'clock. And as we push into the markets, typically the market is kind of sideways action into the rate decision, waiting to see what comes out. And that's usually good for trading for us anyway. So I don't mind trading Monday and Tuesday going into Wednesday. It's usually a sideways type of market, and we don't get, and there's a lot of good signals. Now, of course, if you're not familiar with our signals, I send out live market signals called Zello alerts to the markets when I identify divergences, and they go out and they get delivered right to your phone, and a message comes over like a walkie-talkie. Again, all that could be found at Day Trading Radio if you're more interested in just following along there. But as you can see, the market here is going along. This is the S&P or the E-mini contract right here. And it's trading along. And as we come up to about 2 o'clock, you can see what happened here. So the market here, the announcement came out and the market shot up. It went from about 52.35 to about 65. That's a pretty good move. That's a 30-point move. 30-point move. 30-point move. Let me get rid of that coupons there. Now remember, on our prop account, if you got the 25K, you have to make $1,500 to qualify. Now, if you had one ES contract, and for each S&P E-mini contract, we typically trade the MES, but in a situation like this, you might just want to trade the ES, because if you had one ES contract, when an ES contract moves 1 point, that equals $50 in profit. So a 30-point move would be exactly 30 times 50, 30 points times $50 a move would be $1,500. That would qualify you if you got that out there. Not to say you're going to get the perfect thing, perfect move up there, and you're going to take it off right at the right time before it pulls back, but that's just one contract. If you had two, then you're sitting pretty, and you probably qualify no problem, and you take it off. All right, you take it off and you qualify. Now, if it happens to drop or you go short, remember the market could go both ways on you. It could go both ways. We don't know. This is usually about what the statement is, but I think we could judge it. You know, lots of times the market will spike down and then spike back up. So, you know, it's an opportunity. It's an opportunity to qualify on a prop account. It's an opportunity that you don't typically get because you never know when the news is going to go. Well, we do know sometimes when news is coming out, but we definitely know that the market gets very volatile at this time, and it's an opportunity to qualify where, you know, at $14.50 or $17.50 or $21.50, you have a big account and you want to try to qualify, you could put it on, and there's no real risk. It's like a couple cups of coffee here at Starbucks in New York. Yeah. And that's basically it, except being on the right side. Now, this was last month. Last month, the market actually popped on this. Now, this month, going into this month, we had some economic indicators that have kind of forecast that the Fed is kind of holding off on any rate cuts. So we might get that continued narrative in the statement, you know, that we're going to wait for blah, blah, blah. We're going to wait for the numbers to prove justifiable to do rate cuts and stuff like that. So not expecting any big surprises on the announcement, the rate announcement. That's going to stay the same. It's about the statement and the look forward process and the press conference with Fed James Powell. So how do you figure that? Well, think of it this way. Now, $14.50, $21, whatever you're paying, think about it. You get a couple contracts. You're right before 2 o'clock. You take your contract and you take maybe two accounts and you go long, and you take two accounts and you go short, and whatever one works, you take it off, and you're probably very close to qualifying. Simple as that. It's a gamble, yes, but it's an opportunity when you never have that, and you usually get a big move. Oh, before I forget, the coupons expire on the 31st of this month. So that is on Wednesday. They expire on Wednesday. So I would get them before Wednesday because they won't be active. I don't know if they expire the 30th. That's just not 31 days in April. It's the 30th. So that's on Tuesday. So you have to actually get the coupons Thursday if you want to use the 90%. They usually they come out with the special coupons. These are two good coupons, the 80%, 90% one. Usually they're about 70%, sometimes 71, 72. Every so often they'll drop it. They'll pick it up to 90 or 80, something like that. That's when you have to take advantage of it. But this is an opportunity, again, not to again a straight up gamble. But like I said, you could take a position on both sides of this trade, which I will do. I'll have a couple accounts, and what I'm going to do, if I could get back over here to the we're going to go into the market here a second. All right, so you're going to have your Ninja trade. I'm just going to show you, just for argument's sake or whatever, to if we're coming up, just pretend this is coming up to we're on Wednesday and we're coming up into the FOMC rate decision, you would take your position going into that, and you would what I would do is what I'm going to do, and again, you feel free to watch. I did this last FOMC rate decision, and I got $1,000 real fast on it, and it was great. And actually, it kind of there was two. Was it last, or maybe it was the one before that? There was two moves. It was actually sometimes we dipped down or we popped and we sold off. That's what it was. I caught it because what I did, and I think it's important to do, is actually put in a sell order. So if you have your order in here and it's in, it's just pretend your order is in right here, and you're in it, and then you want to put your sell order in. If you're long, again, you're going to have a couple different counts. One account you're going to be long, one account you're going to be short. So I would again, let's see. Usually you get a pretty nice move, but say 10 points. Let's just give it 10 points. Say that's up about 10 points, even though it might be off the screen. That's 7 points. Let's pretend it's 10 points. You put your order in, and then put another one in, a little bit higher than that. You drag it up here. If I could close that down here. Maybe 5 more points higher. Say you had 3 contracts, so you want to take one off and take another one off. On your short side, you want to do the same thing. You want to buy limit down here if you had it short on. And again, each one of these has to be set up on a different account. You couldn't do it on the same account. But you can buy and then reverse it very easily too. I mean, it's just going to be a time frame. I want to point out that this is the opportunities that you have to take, and don't worry about the, if it messes up on you. I mean, you have to go into it knowing it's a gamble, but it's a good gamble, and there's always an opportunity. And if you have one side or one account that's long, or a couple accounts that are long and a couple accounts are short, and you kind of manipulate, you put some more orders in here. If you want to go short, maybe just put a short in here, and it maybe triggers it and catches the short, like a sell stop. If you get in short, or actually you don't even have to get in, you can put an order in here that takes a short if it breaks down through that. So you get instantaneous news, it gets you in, and then you put an order to buy down here. So it takes a short, and then you cover right real fast. So you can set up your DOM and see what comes. It's almost like a jackpot. Either way, actually, you could take a position, look for that pop, take profits, or even look for that drop in reverse and maybe go down. The fact is, we're going to get a big move, and you could pretty much, get a big move to qualify on these days. Now, if we read into the release and what do we think is going to come out, we know that the Fed is not going to change interest rates, so that's already priced in. The question is the statement, and we could tell from being in the markets for quite a bit of time and watching all the economic reports coming out that things are not progressing as they would like. So the odds of continued the statement's going to come out, and he'll make some comments about the plan of watching for the data. It's data dependent, and how is the market going to react on that? Does it expect that? I would expect it to say, yeah, it expects that. I'm going to take a short. I'm going to take a long. I think the short is going to work out. Maybe I'll take 2 shorts, and just kind of look for that, and take one long. Again, 14.95, or even the Bullinox. I might even do the Apex, and not have to worry about the. If I do qualify, I don't have to rush through it. Remember, both of them expire. The coupons expire on the 30th. So, and if you get a 1-day qualification, you could do that with the Apex. But the Apex, the 1-day qualification is good as the coupon's good. So the 1-day qualification will not be active on the 1st when the Fed FOMC rate decision comes out, unless they have a new coupon out at that point, and it does include the 1-day qualification. I'll let you know that because I send out all the coupons to everyone on that. But for right now, Going into that, the one-day qualification is still active. That's good to know. That how that works. The one-day qualification is good until the coupon expires. So that's the game plan. I think we. I think we drop, but I will have two accounts that I will have some shorts on, and I'll try different strategies on this, and we'll do a study on it. We'll do it live. I'll do one where I'll take a short into the, and we'll do this. I'll actually put all 4 screens up. I'll get it all set up before that. I'll take a position in one. I'll put a sell stop, meaning it'll stop and sell. It'll short if it starts to go down and trigger me in. But you have to be careful because the market tends to fluctuate a lot during these things. We might pop and then drop. That's why I like to put those orders in. So when we get a pop, I'm in simulation mode right here. Don't worry, the markets are not open. But let me close that. I had to put that on there because of. Because it's the weekend and I'm using simulated data right now so I can place my orders and show you exactly how to do that. But right here we could. Let's go here. Why is that like that? Oh, you know why? Probably because that's where the market is. All right, let me close that out there.
Order submitted. Order filled. Order canceled. Order canceled. Order submitted. Order canceled. Order submitted. Order submitted.
Well, I think you understand where I'm getting at. It's hard to place the orders after hours, but 2 forward counts going into Wednesday. We'll be setting them up with you live on Day Trading Radio, 2 o'clock. Get on board if you want to join me. Get the 25K or 50K accounts. I think that's probably the easiest. We'll go in with the ES contract. Two accounts long. Get in right before the 2 o'clock time frame. Give yourself, don't put any stop, don't have to really put the stop in there. Just kind of let it play out because it could get a little whippy. But definitely put your orders in to take your profits, because what happens is it will pop and then pull back, or it'll drop and pop. There's other ways to play this. Maybe we'll be playing it live at that time. So, tune in then. And that's it. That's all I wanted to do. There's an opportunity in front of us. If you need any help setting up, get in touch with me, dtrs@daytradingradio.com. dtrs@daytradingradio.com.